Well, as we await results this week from major names, I do want to bring in Christine Short. She's the head of research at Wall Street Horizon. Christine, it's great to have you on the show this morning. Thank you.
Thank you so much for having me.
All right, very busy with earnings. How much of the S&P 500 has reported so far?
Like you said, we're almost at the end. We're at 93% reported at this point. Growth has settled around 5.5% on earnings and closer to 5% for revenues. So it's been a fairly good season. We're obviously ticked up from where we began, but we've seen less companies beat on both the top and bottom line than we historically have. So 75% of those companies that have reported have beat on the bottom line and about 61% on revenues. And historically, we see closer to 80% or EPS beats and 70 for revenue. So we're a little light there, especially as we came into the season. We saw so many analysts ratcheting down, so we thought beat rates would be higher.
Yeah.
But nonetheless, still great growth. Q4 growth guidance for that has been, for double-digit EPS growth. So we're still, in a high growth earnings environment. It was just surprising to see the beat rates tick down again this season.
I mentioned retailers. I'm starting to get all sorts of deals in my inbox for this holiday shopping season. Of course, these results are backward looking, but we will hear from some of the executive teams on these earnings calls. What are your expectations for the retailers this week?
Yeah, so although most of the earnings have come out, this is the retail earnings parade. So it's highly anticipated, and investors love to watch this week because, like you said, although it's backwards looking, we get an idea for the holiday season. The National Retail Federation has already said that through their survey that they do every year, that this is expected to be a record spending year for U.S. consumers, $902 per household, and that beats a previous record from 2019 by $16. It beats last year by $25. So the U.S. consumer is still very active, but they are looking for a deal. Like you said, the reason you're getting those promotions is because they need to be nudged a little bit. We're still very value driven. They want to know that they're getting a bargain. And so I think you're going to see that in play. Some of these retailers do need to offer deep discounts to sort of woo customers into stores.
And what is your view on the state of the consumer these days, Christine?
We've been saying for a year, the consumer remains resilient in the face of inflation. And yes, we've seen savings tick down and credit card delinquencies tick up, but not outside of sort of a normal range. So nothing alarming. We're still seeing, look at how retail sales have come in. The consumer is still quite strong. Like I said, they are maybe changing what they're willing to spend on, but they're still out there and spending. And so I think that you're going to see a great holiday season for some of these retailers that are offering the right product mix at the right price.
Well, when we last spoke, it was actually before the presidential election. And I know you noted that a recurring theme on these earnings calls, when we hear from the executive leadership after the actual report comes out, was note of the election and perhaps some uncertainty around that. Has that changed in the wake of Trump's decisive victory?
Yeah, I think we've seen more definitive questions being answered. I mean, before the election results even came out in October, we were getting some names like Stanley Black & Decker, Columbia Sportswear. I think you even had AutoZone. So they were preparing for potential policy changes in the form mostly of tariffs for names like that. So you saw tariffs coming up a lot, and about plans and a playbook for what would happen if tariffs were actually put in place. What a lot of names said were, this isn't new, it's not our first rodeo, we've all dealt with tariffs before. And so the three names I just mentioned said we will raise prices, and we will start to do so before those tariffs are even in play, because we usually pass those costs on to the consumer. There's other bigger box names, some of those reporting this week, such as Target and Walmart, that they may get asked about this on the call. They most certainly will by analysts, but because they're such big box names and they have the ability to negotiate more with their suppliers, they likely won't be passing on those costs. So smaller businesses will likely get hurt more because, again, the consumer's looking for a bargain. If prices are going up, they might go elsewhere. And so we have been hearing more definitive plans in the wake of the U.S. election.
I want to talk more about those tariffs and any sense from companies that are reporting results as to how tariffs, one of Trump's key campaign promises, would impact the bottom lines of these businesses.
Right. So like I said, if you're a smaller company, if you're doing a lot of business and production outside of China, you're likely going to increase prices. You're not going to be able to absorb those as well. And so cost of your products will increase. Bigger names that have, more of ability to negotiate pricing, they might just absorb it just to keep their customer base intact. There are others like Steve Madden who might even change their supply chain in where they do most of their production. They do 2/3 of production in China. So they have talked about moving that production to Vietnam, Malaysia, Mexico, other places that have lower the 10 to 20% tax, not the 60% China tax that was proposed. And so there will be some changes. But even Steve Madden said, the cost of moving supply chains, they can't necessarily absorb. So in the short term, costs would be higher, and that would likely be passed on to consumers while they sort of work things out.
In just a few seconds, Christine, we'll bring you back after the bell, but is sticky the right way to describe the inflation scenario now?
Yeah, we saw CPI last week. It's still hanging in there, right? Even in jobs data, we've seen wage growth, and so yeah, I think that's what you're seeing reflected in some of the expectations for interest rates. And maybe a couple quarters ago or even a few months ago, we saw a higher proportion of expected 25% basis point. You just noted 62% probability. Last month, that may have been 90%. So you see the probability of higher rate cuts coming down because inflation has been so high.
All right, Christine Short, head of Wall Street Horizon Research. Thank you so much for joining. We'll see Christine again after the bell.
See you in a bit.
To continue the conversation about earnings, which of course will be in focus this week, I want to welcome back Christine Short. She's the head of research at Wall Street Horizon. Christine, good to have you back with me.
Yeah, great to be here.
Let's talk about NVIDIA. We didn't even get to scratch the surface, really, on the purest play in the stock market, also set to report results this week. How important is this report?
Yeah, so this used to be, like I said, the retail earnings parade. That's how we usually close out each earnings season. But this week has almost exclusively become about NVIDIA. There are watch parties around. It's a cultural phenomenon, right? They are the AI darling. Their chips are critical in the building of AI systems, specifically generative AI, like what OpenAI is building with ChatGPT. So that's why they're so closely watched. We've been watching options contracts coming into the report. The most active have been suggesting that the price will pop about 10%, and that's what we've come to expect. After most of their earnings reports, they do pop in the double digits, except last quarter in Q2. We only saw an increase of about 6%. So there's always the question, how much more room does NVIDIA have to run? PE is currently at 36. That's up from 34 a year ago. But in any case, suffice it to say that this is a highly watched report. It kind of wraps up the entire earnings season. They are expected to report EPS growth of 87% year over year, revenues of 83%, and that's on top of a stock that's already grown 200% year to date. So It's really mind-boggling, but certainly this is one to watch, and you can see investors lined up really focused on this one.
I do want to talk about some of the positioning because it seems really since the summer, at least July, we've started to see some of these small cap stocks recover. They've been underperforming. Artificial intelligence kind of had taken a back seat. Some of the semiconductors cooled a bit after what had been a very strong run. How could this report really shape or portend what might be to come in this AI space in the market?
Yeah, look, even NVIDIA has taken a bit of a breather in the last few days. And like you said, we've had, the AI demand, the AI play kind of took a little bit of a breather over the summer. So usually NVIDIA report, if it's as good as we all expect or are anticipating, could reinvigorate that play into the end of the year. We know CEO Jensen Huang has been out there saying that demand for their Blackwell chip has been insane. So you don't say things like that. You're really setting the stage for a great report. And so you're hearing it out of executives' mouths. We've been tracking the conferences they've been going to. And usually that says something about if a company is willing to put themselves out there, they're established as a thought leader in this space. It says one of two things. Either they have great news to share or else they wouldn't be out there so much, or they're out there controlling the narrative, and both are great things because likely you're not going to attend a conference and be questioned without having good news to share about the company. So we've seen them at 6 major AI events already in November. They've got 2 more slated for earnings days. So It doesn't matter that it's earnings on November 20th. They're also still participating in conferences, which usually tends to be bullish for a stock.
Are there any other stocks in the artificial intelligence space, even the semiconductor space, that are similar to what NVIDIA is doing?
Not quite as on the same scale. Like I said, so many of these generative AI names rely on that Blackwell chip. And so there's certainly smaller ones that are coming up, but that's why you see NVIDIA really as the leader in the space. But again, it's paving the way for some of the smaller names to come up behind it and, also benefit.
I want to talk about some other companies that are set to report this week as well.
Yes.
Snowflake, a company we know well, down here on the Florida Stock Exchange, went public in the fall of 2020.
Yep.
My understanding has moved up its earnings report. What does that signal?
Yeah, so this is really niche data that we collect, but academic research shows when a company reports earlier than they historically have, it tends to suggest good news will be shared on the call, and vice versa is true. If a company delays, you think about it, if you have bad news to share, you kind of wait, you delay. Management teams try to massage the message and decide what they're going to say, if it's going to be bad. How do they offset that a little bit? Snowflake, as you mentioned, they've moved their earnings date up a week. They typically report Q3 in the 48th or 49th week of the year. This is the first time they're reporting the 47th. And since reported in 2020, or since they've been public in 2020, this is the earliest earnings date. Now, I think they were originally expected to report on November 27th. Are they trying to avoid the Thanksgiving holiday? That could potentially be the case. However, I think they could have moved it up a few days but a week is quite significant for them. So I'm not saying they're going to beat, but the expectations are for 22% revenue growth, which is quite good.
Yeah.
Earnings growth still expected to be negative, but we've seen some momentum in estimates there. And so, just leading into the report, it's setting up guidance was a little light in their Q2 report. But really what that led to is just estimates being ratcheted down, which tends to be better for the stock anyhow. So certainly one to watch along with NVIDIA on November 20th, Snowflake will report.
I also want to ask, Christine, on the flip side, any companies, especially as we start to kick into gear for these retail names that are not maybe yet ready to report?
I think Bed Bath & Beyond Bath & Body Works may have been one that actually pushed their report out later. Again, it's not always 100%, but it does signal that because they're reporting outside of their historical norm and they're a little later than when they usually would, are they getting ready to share bad news? We know that they've struggled in recent quarters. What are they going to say about the upcoming holiday? The bad news doesn't always have to be in the form of a miss on the top or bottom line. It could be guidance. It could be something else they're sharing that they're worried how their investor base is going to react to. And we know retailers have struggled, like Bath & Body Works, with trying to offer value to their customers. And so that's one to watch this week as well.
Does the Thanksgiving holiday change earnings for any of these companies in terms of the reporting period?
Yeah, so some will try to avoid the week altogether because they're afraid of being lost. So who's paying attention this week? People might be off on holiday. We saw that certainly happen with the election. Now, usually the second week of November is the heaviest reporting week of the Q3 earnings season. Well, we saw a lot of companies pushing earnings forward, which usually, like I said, would signal, they're getting ready to report bad news. But in this case, in election years, we don't take it that way because we know they're just trying to get out of the way. They know that week, not only did we have the election, we had a Fed meeting, and so many names, were trying to get out of the way, not get caught up in the noise, and so we did see a lot of companies delay this earnings season more than we typically see.
Christine Short, head of research at Wall Street Horizon. Christine, always good to get your take. Thank you so much for joining.
Thank you for having me.